The COVID-19 pandemic has affected all small businesses in the U.S. Virgin Islands, but there is help to move your business forward. The Virgin Islands Small Business Development Center is available to assist entrepreneurs and small businesses. The VISBDC is the territory's #1 resource for small businesses and is sustained by the University of the Virgin Islands and the U.S. Small Business Administration. The VISBDC is nationally accredited and provides one-on-one advising, business education training, and technical assistance at no cost. Attend workshops by experts from both the public and private sectors. From idea generation to exit strategies, the staff at the VISBDC are ready to assist you. So don't wait. Call, email, or visit them on the web at www.visbdc.org and Facebook, or simply download their mobile app on the Apple or Google Play Store. Just search VISBDC. Discover how they can help your business grow and succeed.
Welcome, everyone. As you may know, April is Financial Literacy Month, and the VISBDC has collaborated with Oriental Bank to get business owners and entrepreneurs prepared for business banking with strategies and best practices. Let me introduce our banking professionals for today. Renissa Gutierrez has 26 years of banking experience in multiple roles in marketing, communications, retail products, business development, operations, and leading branch channels for the last 10 years in Puerto Rico and the USVI. She is honored to be a part of Oriental Bank. She joined Oriental Bank in 2020 as a part of the Scotia Bank acquisition as branch channel director for Puerto Rico and the USVI, and has most recently been appointed as the business banking leader in the USVI. Ms. Gutierrez wants everyone to know that Oriental Bank is focused and committed to becoming a real partner for the commercial segment, small businesses and entrepreneurs in the USVI, simply by providing advice, guidance, and a full range of deposit products, access to capital through multiple solutions, and commercial services tailored to the size and needs of their businesses. She is joined by team member Hugh Urbina, who joined the Oriental Bank business banking team in the early 2017, managing a commercial portfolio of 100+ customers, representing more than $20 million in outstanding credits. In November of 2019, he entered the USVI market to achieve client satisfaction by assisting them with the business banking solutions. He is committed to increasing access to capital for businesses of the USVI. Just a friendly reminder to put your questions in the chat, and they will be addressed by the presenting team, either in the chat or later during the question and answer segment. A copy of the presentation will be inserted into the chat and will be available upon email request to info@visbdc.org. We encourage you to take a few minutes after this training to fill out the survey and let us know how we are doing. Ms. Gutierrez, the floor is yours.
Thank you so much for the introduction. Good morning, everyone. And also we want to thank SBDC for the opportunity to join the Financial Literacy Month. So we are more than honored to be here, and really hope that the seminar that we are going to share today and the information that we are going to share today really add value to you as business owners and entrepreneurs. So as Sharika mentioned, feel free to take note of your questions, and at the end of the seminar, we will be more than pleased to answer your questions, okay? And any other questions in the future also will be available to answer it. So today we have a very, very good agenda, and we are going to basically start talking a little bit about who we are, who is Oriental Bank, and our background. Also, we are going to talk about a little bit about how to get ready for a commercial loan and to have access to capital as business owners and entrepreneurs, commercial solutions to help your business growth. And also we are going to talk about a little bit about digital solutions that will help you to optimize your business. And at the end, as I mentioned, we are going to have some closing remarks and take your questions at the end of the presentation. So who we are and basically who is Oriental Bank? We were founded in 1964. And basically we are a diversified financial holding company that operates in US, basically in Puerto Rico and US Virgin Islands. And basically we are under the banking laws and regulations of US. Also, one of our subsidiaries include Oriental Bank, Oriental Financial Services, and also Oriental Insurance. We are very focused on providing a wide range of retail and commercial banking products and services, including lending, wealth management products, services and technology, primarily, as I mentioned, in Puerto Rico and US Virgin Islands. As Sherika mentioned, we joined the territory 2 years ago as part of the integration process and the acquisition of Scotiabank. So we are more than pleased and honored to be part of the US Virgin Islands territory. As a challenger brand, we make the difference through an enhanced customer experience and the value basically that we are add to our customers, and through digital capabilities, more efficient and agile operations, and definitely through an expert advice. Our mission is to enable the progress of our customers, employees, shareholders, and the communities that we serve. And our vision is to be the bank basically to where our people have really a purpose to serve our customers and to make our organization a profitable one. So as you know, we were established in 1964. We start as a federal savings bank. In 1987, we were listed in NASDAQ exchange. And in 1988, basically, Jose Enrique Fernandez became Oriental Bank president. We became also in 1992 the first local bank in Puerto Rico to have a trust division. And from 1993 to 1995, a lot of very important accomplishments happened for us, starting that we were established, Oriental Financial Services were established, and we become the first local bank to have a brokerage firm. In 1994, Oriental stock begins to be traded in New York Stock Exchange. And also in 1995, we established our insurance agency, Oriental Insurance. Then in 2004, Jose Rafael Fernandez became Oriental Bank president and CEO, and he's still our president and CEO. And we begin with our transformation as a more commercial and retail bank. Then in 2010, Oriental Bank acquired Puerto Rico Eurobank's operation. And in 2012, basically we acquired BBVA Puerto Rico operations. Then moving forward on 2014, we became pioneers in the online and mobile banking through different digital platforms such as People Pay, Photo Deposit, that we are going to talk in detail today about that amazing platform. And also between 2016 and 2017, we launched different digital platforms, including Oriental Biz, Cardless Cash, Secure Log, among others. Then on 2019, we acquired Scotiabank's operation in Puerto Rico and US Virgin Islands. And in 2020, we officially entered the US Virgin Islands territory. On 2020, also, we were pleased because we were able to provide our first commercial loan specifically in June 30 of 2020. And also in 2021, we received our licenses for FHA and rural mortgage offering as well. And now in 2020, we are more than ready to help your business grow. So definitely, as you know, we have been quite a time in the territory and in Puerto Rico as well. And as we mentioned, we are more than honored to be here to support your business growth. What we offer for commercial and retail customers, we offer a broad, a wide range of products, from commercial credit solutions, also business deposit accounts, commercial and transactional services, personal accounts, mortgages, as I mentioned, consumer loans, credit cards, among others. And currently we have a branch network of 40 branches between Puerto Rico and US Virgin Islands. Getting ready to access and to request capital requires different topics, and we are going to start talking about what credit, debt to income, and debt service cover ratios. Very important topics when thinking about or looking forward on a short term or in a medium term to request access to capital to support your business goal or your business needs. So why credit is important for your business? Basically, the credit score will determine the probability of a person or a business to pay its financial commitments. And also it's a summarize or a summary to it basically that include the consumer risk of paying on time their debts based on the payment history and the different trends. What are the main benefits of having a good credit, okay? And I know that sometimes this topic is a little bit, challenging or I don't know, have doubts. People have doubts when we talk about credit. So our intention basically is to clear those doubts and also to be able to share with you advice in terms of what are the things that we encourage you to take into consideration when managing your credit, okay? Basically, having a good credit facilitates access to capital. And because definitely it will give you the opportunity to have access to better rates, better terms and conditions, among others. Allow you to save money through better deals and rates, as I mentioned, while paying a high interest when you can have a more competitive rate if you have a good credit. Build on your business credibility and trust. Also, the credit score is built based on your business good financial practices, okay? When you pay on time, when you manage effectively your revolving products, such as credit cards and a line of credits, all those things impact in a positive way your credit score. Also, allow you to obtain better conditions, as I mentioned, terms and loan to value in most of the cases with higher amounts that you can have access for. Allow you to protect your future credit score and to have a consistency in that credit score. And also you can obtain better deals and line of credit when you're establishing relationship with vendors and suppliers that you need for your business to succeed. Allow you also to access tools or to take advantage of opportunities to expand or grow your business. So definitely maintaining a good credit score is key, and also maintaining a good credit score in the personal side is also a very important tool for your business. So understanding your credit score in here, we are sharing with you basically a credit report to explain what are the things that are important and what is reflected in this credit report. Basically, it's a picture. It's a picture of our behavior as consumers in terms of how we have been repaying our debts, okay? And taking the first debt that is showing in here, you may see that it shows what kind of what type of credit is. In this case, it's a revolving credit because it's a credit card. It also shows what is the credit limit, what is the high credit that this consumer had based on that credit limit. What is the term of the credit? What is the balance? If there is any past due balance, it will be reflected here. When it was the last payment, and since when this credit has been open. So in here, basically, we are seeing that this credit card was established in October 19. Then it has a balance above $800,000. Last payment was performed on February 22. And something very important is that this specific credit is not showing any delay or delinquency. When if the person pay late 30 days or more, it will be reflected here, and if it's 60 days or 90 days. So in general, it's showing a good management of this credit card. And definitely it will be shown all the credits that consumer have and also had in the past. Because some of the questions that sometimes people ask us is, okay, until when a debt can be reflected in the credit score? And it could be reflected even though the credit is closed, okay? So very important also to be sure that always pay on time, so we don't have any 30 days or 60 days or 90 days in delayed payments, okay? What about personal credit versus commercial credit? Okay, so from the personal side, credit score relies mostly on the credit reports issued by the main consumer credit agencies that basically are Equifax, Experian, and TransUnion. The lenders report your credit accounts to the consumer credit agencies, and basically that credit score summarizes the credit risk or the probability for the consumer to pay on time the debts. What are the main factors that can mainly impact that credit score that you are building on? The first one is the payment history, okay? And that has a 35% impact in the credit score that you have. Basically, the payment history validate if you pay on time and the past credit accounts. And as I mentioned, if there is any delay, in payments on 30 days, 60 days, or 90 days or more. So basically the payment history is the factor that has the main impact in your credit score. Then the utilization rate also have a high impact, is 30% impact on that credit score. And that happens sometimes with when we have multiple credit cards or line of credit, and we use more than we're supposed to use on those credit cards. So the utilization rate is a key factor, and it has a direct impact in your credit score. Then the experience or the length of credit, it has a 15%. And sometimes people think that is one of the most factors that impact your credit. It has an important impact, but it's not the higher. The highest is the payment history. And then, as I mentioned, the utilization rate. Then the new credit, or how often you apply for a credit, it has a 10% impact. And the last one is the credit mix, okay? It has a 10% impact. And basically that refers to the variety of products that you have. If you have only term loans, or you have a mix of term loans and revolving credit, that has around a 10% impact in your credit score. So basically what we are saying here is that the main factors that we should take into consideration when making or managing our credit is definitely the payment history and the utilization rate, okay? Because between both of them, we have a 65% on the possible impact that could have in our credit score. And when moving forward to the business credit side, basically once a business is defined in terms of the legal entity, as an LLC or as a corporation, the LLC and the corporation can easily establish its own commercial credit file, okay? The credit score take into consideration current debts, credit length, as I mentioned, open credits, payment history, or any possible bankruptcy. But lenders can decide can decide if or not, to report the business accounts to the credit agency. However, from the business credit standpoint, it's very important, and we encourage you to take into consideration the following recommendations to improve your business position. The first one is business expenses must be separate always from the personal expenses. And sometimes when we are starting a business or moving forward to become business owners, sometimes we mix or people mix business expenses with personal expenses, and that definitely is not a recommendation. We should always maintain separate business expenses from personal expenses. Also, avoid to use business accounts to pay for your personal expenses. When you are a business owner, sometimes people think that, okay, this is my business, so I can, I can even pay my business debts and also pay my personal expenses with the profits or the results of my business. And that is not also a recommendation. You should always maintain separate expenses and pay for that separately, okay? Also, if you're a business owner, it is highly recommended that you assign to yourself a salary, and it will be a good practice to reflect how the business is doing, and to really present a realistic panorama of your business and your business success, okay? Also, to avoid to use a personal credit card for business purposes is very related with the first two recommendations that I mentioned. So always maintain separate the personal side from the commercial side. And one of the main things that sometimes we see, it becomes a challenge for business owner is in terms of the amount of money that is deposited into the commercial accounts. Always is recommended that the income that your business generate is deposited in the commercial account, because then you will have the opportunity to have a clear path of the income of your business, the expenses, and a better and more effective management of the financial of your business. So what is the difference between debt to income and debt service coverage ratio? Okay, then we are going to back again to the personal side and the business side, okay? Because even though we are talking about more business related in this seminar, always the personal side will have an impact, and it's important as well for you to understand it. So debt to income or DTI is a very important key indicator whether you will be able to repay a loan or not. Even though your income is not included in your credit report and the DTI will not have an impact in your credit score, many of the lenders calculate the DTI when evaluating a credit application. So that is why it's very, very important. And in here, we basically are sharing what is the formula and how to calculate in a very high level way the DTI. So basically the DTI is the monthly debt payments, okay, divided with the gross monthly income. So for an example, if you have a monthly debt payments of $2,000 and you have $5,000 in gross monthly payment, basically 40% is your DTI. So the best practices is to try to maintain or not to exceed 36% in terms of the DTI, but being between 36 and 43, it's something that is manageable and is acceptable for the lenders, okay? So it's a very straightforward calculation, and it's something that you can do on your own. You can make that exercise, and it's a very good exercise to see how you are doing in terms of the balance between your debts and your income, okay? Then in the business side, the debt service coverage ratio, or DSCR, is a key indicator of a business available operating income to pay current debts, okay? Basically, it shows if the business has enough income to repay its debts, and the minimum DSCR varies depending on the lender, okay? That is not like something specifically, depending on the lender's credit policy is the DSCR, the minimum DSCR, okay? So when calculating debt service coverage ratio, it is most common to use EBITDA instead of the net operating income. And what is EBITDA? EBITDA basically reflects the business short-term operational efficiency. And basically it means that it's earnings before interest, taxes, depreciation, and amortization, okay? So we are sharing here an example also of the DSCR. So basically it's the EBITDA divided by the total debt service. So for an example, if you have 240,000 in EBITDA divided by the total debt service, that is, in this case, the example is 141,000, is 1.7 times, okay? That is the DSCR. So this means basically that this business can pay 1.7 times the debts, okay? In terms of our minimum DSCR is for secure is 1.25, and for unsecured a credit is 1.35. So this is something also that we encourage you to do this exercise if you're currently a business owner, because it will allow you to get prepared if you are thinking to request access to capital in the short term or medium term. It will be good for you to start making this exercise to see where you are in terms of your debt service coverage ratio, okay? What other considerations we encourage you to take in consideration when requesting a commercial loan? Well, there's a few, but we are sharing here the main ones. The first one is to have a clear definition of the purpose of the loan request. Why you need to request a loan? Is it for working capital? Is it because you want to purchase the property that you have been renting for some time? So define the purpose of the loan is very important, and it will be one of the main steps when you are getting prepared to request a loan. Also, to have a clear understanding of your business legal structure. If you are a DBA, that basically means that you are doing business as and you conduct business under a name other than your own. If you are an LLC, that is basically a limited responsibility corporation, or if you are a corporation, profit or non-profit, okay? That basically means that the legal entity acts as a single entity. Basically, from the legal standpoint, the corporation is a person and it's recognized like that under the law, okay? The third time, and I think that is one of the most important, is what we call as the 5 C's of credit. The 5 C's basically are capacity, capital, collateral, character, and conditions. Capacity basically is the ability and probability of the borrower to repay the loan, depending on the terms and conditions and the specific terms. Also, capital basically means that the personal and business wealth. Collateral are the assets that will be pledged, okay, in the case that is required as security for a loan repayment. For an example, it could be cash, it could be land, it could be a property. So collateral will be basically the assets that will be pledged as a security during the request of a commercial loan and when closing that loan. A character basically means the experience, the reference of that business owner, the credit, the reputation, and the financial responsibility of the borrower. And the last one, but not less important, are the conditions, okay? Basically, conditions are or refer to the business stability, how the borrower will use the money that is requesting, the state of the economy, competition in the market, any upcoming legislative changes that can impact the industry, so that can impact the industry of the business that is requesting the loan, among others. So in general, the conditions that can impact positively or negative that business. The fourth one is the financial data and the required business documents for the business and the guarantors. And this is very important because sometimes financial data is one of the more challenging aspects, when requesting a credit loan, a commercial loan. So having financial data updated and available for that process will be key, because it will be the information that will allow the lender to understand better how the business is doing. What is the business panorama? What is the financial panorama of that business, okay? And how profitable the business is or not. So basically having up-to-date financial information will be key during this process. And then the business plan. If you are a new business, or you are going to expand, or you are going to diversify your business with additional service and products, a business plan will be required with minimum of 3 years of financial projections, okay? So these are the 5 main considerations for a commercial loan. Obviously, depending on the product, the terms and conditions, it will be another considerations that will be obviously advised to the business owner once the process start and the application is being in progress, okay? So what are the main purposes when requesting access to capital? Most of the purposes are here, but definitely it could be others. So most of the cases, property purchase is one of the main purposes for requesting access to capital, for owner occupied or for rental income. Also acquisition of equipment, machinery, furniture, inventory, trademark, goodwill, that basically is the intangible assets or the business value above the tangible assets. It could be requested also for working capital for short term or long term. Also commercial property refinancing or construction, property improvements, leasehold improvement, and other purposes such as expenses related to a franchise, buyouts, among others. Okay, so these are the main purposes, but as I mentioned, it could be, you can have other needs as well. So what are the main documents that we encourage you and recommend that you take into consideration and have available when applying for a commercial loan? Well, definitely these are the minimum documents. During the process of applying for a loan, it will be required the last 2 financial statements and or tax returns. We are supporting schedule for each of the legal entities and subsidiaries of that business. Also, last 2 personal tax returns for any natural person associated to the financing, including guarantors, and 3 years financial projections for new businesses or expansions. A personal financial statement of the guarantors, that will be very important, and sometimes it's a doubt why I need to provide my personal financial statements. Well, because if you are going to be a guarantor, that will need to be taken in consideration as well. Interim financial statements, if apply, the last 6 months of the banking statements of that business. The last, and when we talk about banking statements, it needs to be of all the accounts that you have available. If you have accounts in multiple banking institutions, it will be required the 6 months of all accounts that you have available, okay? The last 2 years of financial statements or tax returns from the business intended to be purchased. That is in the case if you are going to purchase a current business that is operating, okay, that is currently operating, we will require the last 2 years of financial statement, because it's important to validate how that current business is doing. And that will allow you also to protect your investment, okay? And a business plan with detailed projections, if it's less than 2-year business, or as I mentioned previously, if it's an expansion for an existing business. In terms of, in addition to these minimum documents, if the product that you are requesting is a line of credit, also it will be required account receivable reports that we encourage always to be not more than 30 days from the delivery date, and the recent work on hand with not more than 30 days from the delivery day as well. In terms of the term loans, we will require purchasing agreement or letter of intent if that is the case that you are purchasing a property. Invoices, purchasing orders, or quotes if you are making improvements in that property or buying or acquiring equipment. And in this aspect, it's very important that when you are managing quotes or purchasing order, always is very important to take into consideration that those quotes will need to be from a subject matter expert, okay? It will need to be managed by a contractor, okay? It's not something that will be acceptable to do an estimate on your own, okay? We will require a subject matter expert, and at the end that will protect your investment and will reduce also the risk, because you will have someone that has the expertise to maintain or to perform the improvements that you are looking for to put in place in the property, okay? And also the rental agreements and or rent rolls in the case of if the case is that you are purchasing an income producing property, okay? So now we are going to talk about balance sheet, income statements, cash flows, repayment sources and guarantees, and also Mr. Hugh Urbina, that is part of our business banking team in USVI as well, is the one that is going to share this important and valuable information. So Hugh, the forum is yours. Thank you so much.
Thank you very much, Renissa. First of all, before starting, I would like to thank SBDC chapter in Virgin Islands and especially Ted Gutierrez, Greg Kopach, Mary Jo, Jane, Mary, and Sherika for the opportunity of being here this morning. For us, it's a pleasure, and we are committed to assist all small business owners and entrepreneurs on the Virgin Islands. So feel free to reach out to us, Renissa and I, anytime you think that is possible. At the end of the presentation, we will be sharing our personal contact information for you guys to reach out to us whenever you feel that is needed. Okay, so we're gonna go back and head to our basic accounting terms, especially some of the financial statements we in the banking industry tend to analyze whenever you, the business owners, reach out to us for access to capital. Some of these financial statements are prepared by the CPAs or accountants, and SBDC also assists you all in preparing all these scenarios for projecting that information. But it's important for you, the business owners and entrepreneurs, to at least know the basic terms that we analyze and look out in the banking industry. So we're going to start today with the balance sheet. This is the first statement that we look at. This technically shows up all the business economic resources and values. It shows us what the business owns and what the business owes. It first starts with the assets. Mainly you have two types of assets. You have the current assets and the fixed assets. Okay, so current assets, just giving a quick example and definition, are those company assets expected to be sold or used as a result of a standard business operation over the next year. Okay, it's important to emphasize that it's only within that year. This can include cash, accounts receivables, inventory, other current accounts assets. It also shows up prepaid expenses and marketable securities. Okay. Going with the second type of assets, those are the fixed assets. These are also known as the long-lived assets. They are tangible assets or property, plant, or equipment. It usually includes business lands, facilities, equipment, any property that the business currently has. If the business is a startup business, the SBDC chapter in Virgin Islands is more than welcome to assist you in preparing this type of balance sheet and statements. We're going to go back to the second type of statements, and this one is the income statement. Basically, the income statement is usually known as the P&L or profit and loss. The profit and loss basically shows up the gross sales of the company or the startup business. After or below the gross sales, usually you tend to deduct the cost of goods sold. That is on those businesses that tend to sell specific products. If your business is mainly a service business, you will not see that cost of goods sold portion because you have no products or cost of goods sold to be sold. You're just a service business. This technically would show us what are the gross sales of that business and all the specific expenses, and it would specify in each of these lines all the general and administrative expenses. Like for example, salaries, employee benefits. We're going to see here professional services, marketing and advertising, rents, equipment rentals, maintenance, depreciation, insurance, and some other general office expenses. It's important for us to specify and making a clarification here. When you see depreciation, that is actually depreciation. It's not actually an outflow of money that you can say that is called an expense. Depreciation is a portion of a fixed asset that has been considered consumed in the current period. So we, the banking industry, in order for make a calculation or a debt service repayment capacity to you, the business owners, we take into the consideration basically the bottom line that is called the net profit. Okay, we add to that net profit that depreciation expense. We do kind of a write back of that expense because it's not actually an expense. So Renissa, if you go to the next slide, we're going to see the debt service coverage ratio that I'm talking about. There's going to be the net income plus the depreciation interest, and that will be the income base that we're going to divide for all the business debts. And this is going to be all annual debts for that business. Those debts of that business could be existing debts, like for example, line of credits, credit cards, any kind of repayment of a certain portion of SBA loan, like the EDL or PPP loans. We consider the base, all the business income, divide that for all the business debts, and that's going to take us to the debt service coverage ratio. That's technically the measurements that we use in the banking industry to calculate the capacity of repayment of a certain business. Just giving a quick example of those terms that we tend to use here in the banking industry. If you go to the next slide. The cash flow purpose. So basically the cash flow purpose of a business is going to be all the business inflows compared or versus all the business outflows. If the business inflows are greater than the business outflow, that means the business has a positive cash flow effect, resulting in a positive capacity of repayment or covering the specifics business responsibilities for us, the bank. Can you move to the next slide, please? This is how a cash flow would look like. At the top, you're gonna see all the cash receipts, like the sales from the business, all the collections, all the interest paid, the loan proceeds. That's on case you receive a loan, for example, a PPP loan, that will be a cash inflow for the business. It will be considered like that, even though it has a repayment and it is considered a debt until it's paid out, or maybe you apply for the forgiveness of the PPP loan, but until you don't get that forgiveness, it's considered a debt. So we ended up looking at the bottom line and the net cash flow that it would show us the business capacity and cash flow inflows for us to consider that as a capital. In some other terms, the cash inflows minus the cash outflows, it reflects as the business general capital. And we consider that in when we review a specific credit facility, just to know if that particular business has the sufficient capital to recover the debt. So let's move to the next slide, please, Renissa. Some of the business owners like you or those startups business, when they first come at me, they say, "Hey, Hugh, I have a question. I'm interested in actually having a loan. What are the specific requirements or guarantees that the bank or SBA is going to require?" So that's a good question. That's a good question. So that's why we are here to teach you and explain all the typical source of repayments and guarantees that the banks require. For example, we the bank, the first primary source of repayment that we consider to pay out a loan is basically the business operating cash flow. So we consider that as the primary source of repayment. If the primary source of repayment, for some reason, the business did not make the projected income that it expected to have, we go to the secondary source of repayment. And the secondary source of repayment will be the guarantor or the personal or the individual behind that business. Okay, it will be the business owner. I know Renissa mentioned earlier that we highly recommend for businesses to assign a salary or a compensation from the business. In the case a business owners assigns a salary and they report that on their personal tax returns and the business ended up having negative bottom line or net income, we consider that salary or compensation that the personal or the business owner assigned for us to repay the business loan. So we consider that as a secondary source of repayment. What happens in case we don't have a primary source of repayment, neither a secondary source of repayment? We look out for the third source of repayment that will be technically the liquidation of all the business assets or the collateral. We're going to see the next slide what are some of the guarantees more often known by the bank. So you remember that I mentioned earlier that some of the business owners call me and say, "Hey, Hugh, what are some of the guarantees the bank requires?" So there's a few. There's a few. We just need to look what's the better option for the specific necessity your business has. So we have the SBA guarantee programs. We use, later on in some other slides, we're going to discuss specifically some of the business or SBA guarantee programs, but these are programs guaranteed by the federal government, SBA, that mitigates the risk to the bank, and it's considered a guarantee for the bank to mitigate that risk in order for us to lend more money. Some other guarantees are the personal guarantees. Some of you business owner here today may say or think, "Hey, but look, I'm having a loan uh, with my business, so why I need to guarantee?" So it's important for you to understand that all business loans and credit facility that you would have with a bank, especially here in Oriental Bank, all those facilities are not going to be shown up on your personal credit report. That's just your business credit report internally here in Oriental Bank. So if you give the personal guarantee, what you're saying is that basically, if just in case if the business does not comply to repay the loan, I personal guarantee that I'll respond from, I will respond to the bank from my personal perspective. So I will take the full responsibility if the business does not comply with the necessary, capacity to repay the facility. So that's a personal guarantee. Other guarantees of property. Let's say this is a purchase transaction, so, purchase and sell transaction. We finance you the property and we take that property as a collateral. So that's also a guarantee. We have CDs, certificates of deposit. That's other option. The business can go after us and say, "Hey, look, I would not like to have my property as a collateral. Instead, I have this cash that I have saved. I would like to put this cash in order for you to assist me with more money." Okay. We have equipment and machinery as a guarantee. Let's say you own a bakery, for example, and you would like to buy an industrial oven. So we lend you the money and we take the equipment or machinery as a guarantee. Okay. Also happens with the commercial vehicles in case we would like to finance you a specific vehicle. Accounts receivables. These often we take guarantees. We do a UCC lien over businesses accounts receivables. UCC lien is technically a lien over all business accounts receivable. So we finance you or we approve you a line of credit, for example. You use that line of credit for working capital purposes for the business. You buy equipment, you pay the salaries, something happens and you can repay back the line of credit. So we have the accounts receivables. Those accounts receivables can assist you to repay that and apply some principal portion to that line of credit. Also, we have land that is very similar to the property that we mentioned below. These are just the general guarantees that we tend to use. It is important to specify and mention that if you young entrepreneur, if you are a business owner that has less than 5 years in operation and you may not have some of these guarantees, that doesn't matter. We are here to assist you. That is our job. We are here to assist you even though you don't have all those guarantees. Okay, that's why we use the SBA guarantees programs. Okay, And some of those SBA guarantee programs will be shown in the next slides. For example, we do have the SBA guarantee programs. We have commercial mortgages, term loans to finance equipment.
I'm saving about $5,000. It feels really good.
Yeah, I can hear someone there. Is everything okay?
We're good, you can continue.
Okay, that's good. If someone has a questions, you can feel free to ask that at the end of the presentation. So you write that down or put that on the chat here in the presentation. These are some of the business banking lending alternative line of credits. We do have business credit cards and all the term loans. Can you please go to the next slide? Here we are talking about the SBA guarantee program. So you remember that I mentioned and I emphasize specifically in these SBA guarantee programs, and there's a reason behind it. The reason behind it is that it allows you, the business owner or entrepreneur or the borrower that is interested in getting a credit facility, to put less money as a down payment. So that would represent a minor initial contribution when you would like to have a credit facility. For example, if you would like to finance a property and you are an ongoing business with more than 2 to 3 years, we can finance you up to 95%. Okay, of that property, 90% of the property value. If we don't use SBA guarantee programs and we go directly with an Oriental Bank loan, that would represent 80%. So here you see a huge difference of 15% less in contribution for you, the business owners, by using the SBA guarantee program. This is just an example for many of the situations that we have seen. Also, it's more cost effective for you when the bank or Oriental Bank use the SBA guarantee. We do not charge any bank commission. We do not charge any bank commission. I will repeat that again. So that's a cost effective situation, a real life situation that happens when you, the business owners, take an SBA guarantee. And that is why it's there, to assist you. Let's go to the next slide. These are some of the SBA programs we internally in Oriental Bank manage. The most common one is the 7A program. We can use this SBA guarantee to refinance a current commercial debt, to finance a purchase acquisition of a property. We can use the 7A program to acquire equipment like company machinery or inventory and furniture. And we can also use this SBA 7A program to finance working capital needs in line of credits. So the 7A programs, it provides the bank an 85% guarantee on loans of 150,000 or less. So in case that loans goes in default, the banks gets covered, and that's why the banks would like to use this SBA guarantee in order to assist all clients, even though you guys don't have any guarantees to show up at the bank. So that's why the reason we use primarily the SBA guarantees. It's allowed the business owners to have access to capital. The other program we use is the SBA Express. The SBA Express, we do have internally the delegation to approve all loans up to $500,000. So it's way more quicker to use this SBA Express rather than the 7A. But it all depends on the necessity. If you have a necessity of over $500,000 or over $500,000, then we use the 7A program. Eventually, Oriental Bank is looking forward to have that delegation for us to internally approve all 7A loans. So those are good news for you, the business owners that are here today in this presentation. Also, we do have access to the 504 program. This is the last program we are showing right here in this slide. We do have a close relationship with all the CDCs. The CDCs are nonprofit operations that operates under the SBA umbrella. They are certified development centers, and we do have in Puerto Rico and Virgin Islands, COFEC, La Marketing, and Pymes Financial. This type of loans is structured using the 504 programs. Basically, the benefit for you, the business owner that is listening today, is that the Oriental Bank will put 50% of the total project cost. SBA would have a 40%, and you only put 10% of down payment. And you can include any purchase, purchasing any property, and you can include into that loan any type of improvements. So all those costs related to buying that property, legal expenses, engineers that will be working in the improvements, all the designs, the plot plan, you can include all that as a total project cost. And at the end of the day, you ended up just putting the 10% down, okay? It has more benefits because the SBA portion of the 40% is gonna be a fixed rate based on the 10-year bond in the market that right now is rendering 3.8, maybe 4%. That's a fixed ratio. It will be a fixed rate for up to 25 years. So it's it's quite a benefit to use this program. Let's wrap up and move to the next slide, please. Some of you would have heard about the line of credit. We do offer them. This is a good option or product for those businesses that are in operating into day-to-day, buying the supplies, all the equipment. Maybe you buy to your supplier the products and then you resell them. And then once you sell them, you need to wait 30 to 60 to 90 days for you to get paid. So you have an account receivable pending from a client. So this is a good option for you to finance and have additional access to capital for you to pay all your employees, all the payrolls, and pay your suppliers. So this is an extra cushion that you can use as a reserve for these type of examples. We, Oriental Bank, offer two types of line of credits. We have the revolving line of credit and we have the non-revolving. The non-revolving is usually made for businesses that has a specific, specific necessities. For example, you are a general contractor and you want to bid on some government project, and that project is $5 million. Maybe you don't have that capacity to run that project, so you need a specific line of credit to that specific project. The other revolving line of credit is just an operating line of credit that you use in your day-to-day operations. Okay, let's go to the next slide. As we mentioned earlier or before, we do have the credit card. We recently launched out this product in the USVI territory. It's an honor for us and Renissa specifically that it was in charge of the project. So we have today the good news that we are now offering business credit cards in the USVI territory. Minimum credit limit for these credit cards are 5,000 and they can get up to 250,000. You, the business owners, can assign card holders, unlimited card holders. So let's assume you have other business owners. You can assign 1, 2, 3, 5, 4, business card holders to that specifically. The good or one of the best results or one of the best benefits that we consider the credit card has is that for you to reconcile all the business expenses, the business owners, when they usually start using their personal credit cards, but you can deduct that from your business expenses. So the good reason is by using a business credit card, you can at the end of the year when you need to file up your tax returns, you can pull out or extract a report, and all those travel expenses, business meals, and business expenses that you charge to that card, the accountant or CPA can put that as an expense under the general expense and administrative by your business. So you are technically getting a benefit by deducting these expenses rather than using your personal credit card. Also, you have the microprocessorship, and now the new credit card, they have the contactless technology. So for me, I believe that's all. I'm gonna give the control back to Renissa so you can keep enjoying the presentation.
Thank you so much, Hugh, for your participation and for the valuable information. So now we are moving forward with the last topic that basically is talking about electronic payment solutions and how having this alternative will allow you to optimize your business. In terms of how electronic payments can support your business and make your business more effective, definitely having this alternative will allow you to improve the customer experience by providing multiple payment solutions, not only cash, increase the business operational effectiveness, improve definitely the business cash flow, because you will have immediate deposit in your account instead of the need to go to a branch to deposit the cash that you have. So definitely you will have a more effective and availability of that cash flow. That basically can be summarized with how do you charge for your services, how do you make payments, and how do you deposit, or how your deposits are managed. Also will allow you to expand or diversify your business offering and services, because you will be able to get closer to other markets and to other consumers, and to support and encourage business competitiveness, because of also having more a payment alternative available for your customers will make you more competitive, and also will improve that customer experience, and will be more aligned with the behavior of the consumers today, that most of the people use electronic payments and the debit cards and different solutions that we are going to share some of those solutions today. The first one is the Oriental Cash Management that we call OCM, and basically it's a platform that is available for you 24/7. It's an online platform, and it allows you to manage cash flows, make your payroll at your convenience when you decide, and it's a very easy and secure way to manage your day-to-day transactions, business transactions. Also, one of the benefits is that it's available to the mobile banking to deposit your checks and more. You can make payments, as I mentioned, to your employers or vendors. You can transfer between your accounts, order stop payments, and check your basically your commercial transactions in time, like loans and line of credit. So basically it's 24/7 to monitor your transactions, your business transactions, your balances, among others. It definitely also provide you more agility with payments and collections. It give you more agility when we are processing a payment, and also with the same day ACH collections. It allow you to pay the payroll without any inconvenience, make ACH payments and deposits, perform local and international electronic transfers 24/7 when you decide, and perform automatic payments at your convenience. One of the main added values that I really believe and see as the added value to you as business owners is that we have the positive pay module, and that positive pay module is available for checks and ACH. Why? Because unfortunately, you know that there is a lot of trends in terms of frauds and hackers and all that. So definitely taking more precautions as business owner when managing our finances are key. So through positive pay, we strengthen security in transactions that are debited from your account with ACH positive pay unauthorized electronic debit protection service. So you can detect non-authorized ACH debits in advance, okay? So you can avoid check frauds with positive pay. Also, it offers check fraud prevention for your business operations. So you can monitor, for an example, doubtful checks and the exceptions generated by the system, and you will be the one that decide to pay or return the transaction. Also, you can detect non-authorized checks, obsolete ones, or altered quantities. And so that is a really a good added value on this time that we are. So it will allow you to decide what kind of transaction to pay or to return that transaction in advance. and it will allow you to be more proactive instead of reactive. It also will provide automatic alerts because we process files over every 5 minutes. So with automatic alerts that are already included for file processing and file receipt, you will be notified of those files processing, and you can validate and review those files processing as well. And it will provide in the checks and the ACH part as well, OCM reportings that you can have available all the time to review and monitor and deep dive on your transactionality. Also, we have Oriental Biz. That is the right solution for our commercial customer. It's easy as well, convenient and secure mobile application that is available for Android and iPhones as well. And it allows you to manage all the commercial transactions and cash flow in real time, 24/7. You can verify account balances, view up to 90 days activity for each of your deposit accounts, view specific account activity by searching that information by date, by account number, or by check number. You can transfer funds between your accounts, deposit checks via photo deposit that we are going to talk about in a few seconds, make payments and programs recurring payments, approve ACH and wire transfers from your iPhone or your Android, view checks images, and also look for ATMs and branch locators. So it's extremely convenient, and you are the one that decide when to perform the transaction 24/7. So what about commercial deposit? Okay, why you need to go to a branch to deposit a check when you can do it through your phone? It's available free of charge through the Oriental Biz application to deposit checks on your commercial account when you decide it. We have different thresholds. The maximum limit by check is 15,000. But if you see the aggregate daily limit is 45,000, and the aggregate monthly limit is 75,000. So we are talking about higher amounts, and each check, the limit is 15,000. So definitely it's a very convenient and secure tool that you have available through your Oriental Biz app to deposit your checks and be more effective in the time management and reinvest that time in other more important topics that can add value to your business. We also have available different options for merchant services, or what we know mostly as POS. We have complete solutions available for debit and credit payments processing aligned with your business needs. We have acceptance from MasterCard and Visa, debit card with PIN, EBTs, gift cards, American Express, and Discover. From the solutions that we offer, we have what we call gateway services. We have also terminals that can be rental and servicing, integrations to POS system and web-based. We have more mobile applications, virtual tellers, and definitely everything related to Check 21, ACH, and Check Guarantee. One of the most that I personally like a lot is the virtual terminals that it's very convenient and provide a very up-to-date technology. It's 100% web-based platforms that provide payment processing solutions with the same effectiveness than having a physical terminal. You can use smartphones, tablets, a desktop computer to access the virtual platforms, and definitely the payment acceptance from you can do it from any place that have internet access. From those virtual terminals, we have Swipe Simple, that basically is a platform that can be accessed via any mobile device that have Bluetooth Low Energy, and you can have, as you may see here, a card reader. So it allows contactless payment methods such as Apple Pay, Google Pay, as well as magnetic stripe and EMV chip methods, accept credit and branded debit cards on the go, include a mobile card reader, as I mentioned, that you can take anywhere and connect to Bluetooth and auxiliary input as well. It's available through Swipe Simple mobile app. It's web-based, and it's allowed unique and recurrent payments. And one of the most convenient parts of this solution is that, as you can see, if you have a business that move, from place to place, this is something that you can bring with you any place, and process those payments and make it easier for your customers. It also provides, as part of the alliance that we have with Dynamic Payments, that is our provider, and it will show you, and you can access a dashboard that will be available for you to monitor the amount of transactions, the average transactions, the average ticket of your transactions, among others. And it's something very simple, and as I mentioned, you can access it through any mobile device to process those payments. The other one is more aligned to what we call e-commerce. And as you know, as the result of the pandemic, a lot of business decided to evolve and diversify and to adapt to our new reality. And e-commerce now went to the next level. So Pay to Link is an amazing solution for e-commerce because it allows you to send an invoice to the customer that received your service or purchased your product, and you can send that invoice by SMS or a text message, email, or WhatsApp, okay? Without the need to do any integration with any other payment system platform. So it's very easy, very simple, and very secure. You send that invoice, as I mentioned, to the customer, and the customer is the one that will decide which payment method will use. It will use a credit card, it could use a deposit account, or it could use as well a branded debit card. When we mention branded debit cards are the ones that has the Visa or MasterCard logo, okay? And the customer receives that invoice, and as I mentioned, they are the ones that input the information and decide what payment method to use. So as you may see, in Oriental Bank, we have a wide range of electronic payment and electronic and processing solutions that can allow you to improve that customer experience, but also to optimize your operations and make it more efficient. So basically, that's the end of our seminar. We hope that it really added value to you as business owners, and definitely we are more than ready to support you and your business needs and to advise you in any way that we can. So now we are open for questions, and we really appreciate again the opportunity to share this valuable information with you.
Okay, so we encourage everyone to put their questions in the chat. And while we wait, I'll just make a quick announcement. VI SBDC has so much in store for USVI small business owners. Visit our website at www.visbdc.org and download the VI SBDC app for your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google My Business, and subscribe to the VI SBDC YouTube channel for our on-demand webinars. Webinars hosted like the one today will be accessible from our YouTube channel. So Ms. Gutierrez, I don't see any questions in the chat at this moment. So while we wait, I guess I can go ahead to proceed with a few of our upcoming webinars and events. So on the 21st at 11 a.m., for those entrepreneurs on the call, we have Starting Your Business in the USVI. And we want to make mention of Small Business Week 2022. So we will have the USVI SBA kickoff video launch with our Puerto Rico and USVI district office, providing information on what SBA Week entails and how they've contributed to small businesses locally. So I see some questions trickling in. So I'll go ahead and I'll ask you, is there a fee for using Swipe Simple?
Yes. Thank you so much, Mary Jo, for your question. Yes, it is, but it will depend on the transactionality and average ticket. So I am going to share my information, and if you want more details and you can share an average of those tickets, we can share with you more or less what are the fees. Okay.
And we have one more.
Yes.
Does the bank make real estate loans besides SBA?
Yes, Hugh, if you want to deep dive in the question.
Yes, that is correct. We do offer real estate loans besides the SBA options we discussed in the presentation. That is correct. We do offer those type of products and opportunities.
So I'll take this opportunity to let everyone in the meeting know that the PowerPoint presentation for today's webinar is accessible directly from the chat. So you can just click on it and download it to your device. Any more questions for the Oriental Business Banking team? I don't see any as yet, so I'll continue to highlight Small Business Week 2022. So we have the government contracted series happening, and it's going to be in person. On Tuesday, May 3rd, it's going to be in St. Thomas on the UVI campus at the ACC building at the first floor. It's going to be from 8:30 a.m. to 12 p.m. And on St. Croix, we're going to do a repeat. And so that's going to be Wednesday, May 4th at 8:30 a.m. to 12 p.m. That's going to be St. Croix campus, the Great Hall. We encourage everyone to come out. We have another question. What is the max amount and how do I find out more information?
Yeah, the max amount, what specifically we're talking about here? I'm sorry for the.
I think that Stephen is referring to the real estate loan directly with the bank rather than with the SBA.
Yeah, we honestly does not have, Steve, any loan limit specifically. It all determines on the loan to value, but we don't have any limits in terms of loan. It could be 5, 10, 25, 30, 50 million deal, and we can handle that. So no limits for real estate transactions.
Here's another one. What, if any, service for small business farmer just starting out?
All right, so yeah, that's a good question. It says for farmers, right?
That's correct.
That's correct. Yeah, so we do offer some USDA programs. We have specific programs like the BNI guarantee program that are specifically to farmers, locally farmers that are startup business and all that. So that person, if he or she can reach out to me directly, I'm more than happy to share some of the information or insights. But we do offer some assistance with USDA directly.
Mm-hmm. And basically adding to what you mentioned, we focus mostly on 7A, 7A Express and 504 program, but as you mentioned, we also have available the other alternatives that SBA, the other SBA programs also as well. So.
Okay, so we're still waiting for more questions. The presenting team was sure to put their information directly in the chat. Their email addresses are there. You can reach out to them directly. I think Hugh actually added his cell phone number. Here's another question. Do you have anything specific for veterans?
Yeah, we do offer, SBA do have some certain benefits for veterans. When you use the SBA guarantee, there is a checklist that the clients needs to comply, and if that checklist they check that they are a veteran, there are certain fees that does not apply to veterans transactions. So there's kind of a waiver of some fees that SBA grants to veterans. So yes, there's some options and benefits for veterans.
Okay, so that basically looks like it in terms of questions. I guess we can transition to the next slide so that the audience can capture all of our contact information. We want to thank the Oriental Business Banking team for putting on this presentation and sharing all that information and resources with USVI small businesses and small business owners. So in closing, I'll highlight SBA Small Business Week. So we have our SBA kickoff video launch. We have our government contracting series, which is happening in person both on St. Thomas and St. Croix and the UVI campuses. We also have our Women's Business Expo that's happening Thursday, May 5th in St. Thomas from 10 a.m. to 3 p.m. And in addition to that, we'll be having the USVI Small Business Awards at 12 noon. That would be our St. Thomas location towards the UVI campus where West Bay Supermarket was formerly located, that parking lot right there. Just come up to the second floor to the SBDC location. So we want to thank everyone for joining us. Once again, Oriental team, thank you so much. Here's our contact information if you need to reach out to us for any assistance, and enjoy your day. Bye, everyone.
Thank you. Have a great afternoon. Bye-bye. Thank you.
Thank you very much, Shakira.